Magnus joined us a few weeks ago, a month or two ago, I think, when right before Minister Mbowene's budget, and then we asked how that budget would affect your budget. And now circumstances have changed so much that we thought we would ask Magnus if he could give us this morning some time of his to take us through how your budget might be affected by COVID-19. Magnus, thank you so much for joining us.
Yeah, thank you very much, Hermann, and to everybody out there, good morning. I suppose a good day to do it. You've got nothing else to do, so you might as well listen to us.
Yes, and hopefully we don't depress you even more. Just a few words on how this morning will work. You can, in the Facebook comments and so on, you can pose questions that I will ask Magnus, and we will chat a bit about. My colleague will screen, Mr. Nick Babaya, who you guys saw last time when we had a discussion with Davy Ruitt and Mike Schüssler. He will screen those questions. So if you ask good questions, the chances are that we could ask Magnus his thoughts on those questions. But we will start with a chat where I will ask Magnus a few things, asking to elaborate on things. And then once we've been going for, let's say, 20-30 minutes, we will go to your questions. So, Magnus, perhaps let me ask you the first question. What is everyone missing about this crisis? What's the one thing you think people aren't really paying enough attention to?
That is a no ball for the first ball, or a Yorker for a first ball. You know, I think all of us in South Africa and around the world, we are analyzing and thinking about how this coronavirus is going to impact on us personally, on our jobs, our careers, that of our children, our income, and our investments. And I think with great reason, a lot of people are concerned what the impact is. And the impact is already being felt in many ways. But in the South African context, one has to put the last 5 to 7 years into that to get the context right, in the sense that our financial and economic problems have been building up for a long time. And even before the COVID virus hit us in January, South Africa was in a very precarious financial state. We had the downgrades looming, or in fact, we had them already, but we had the final one looming. The coffers were bare, our economy was sidelining and declining. And on top of that, we now have the full impact of the coronavirus on our economy. And I think that is what a lot of people are perhaps missing. And that's point number one. Point number two is a lot of people seem to think, well, after the lockdown is over, we'll go back to work and everything will be fine. That is the second mistake that one must not make. This is going to impact on our lives, our businesses, our salary, our income, and our investments for a number of years. And some sectors of the economy will probably not recover for a very, very long time. That one needs to understand. Pardon me. So, having said that, if you look at what's happening around the world with economies, stock markets, financial indications, and so on, we are being hit particularly hard for a variety of reasons. If I have to explain it to my teenage daughter, or perhaps someone who doesn't follow the financial markets as much as I do, we are, as Warren Buffett always said, when the tide goes out, you will see who has not been wearing bathing shorts. Now, South Africa has not been wearing bathing shorts. The tide has gone out and we are brutally exposed. And take that any way you like. We've got no money in the tank. There's no money in the coffers. We have not put away money during the good times. Like if you compare us to a country like Norway, for instance. Norway has no government debt, zero. It took the proceeds of their oil boom of the last 20 to 30 years put them in a separate fund and hasn't touched it. So Norway as a country will come out far quicker and far better than South Africa. We are at a stage where our loans and foreign debt or national debt already at a record high. And now we have to go and borrow a humongous amount of money. And I'm not sure about the numbers as yet. There seems to be a bit of confusion. So I don't want to be a bear and a fearmonger, but the situation is quite dire, and one must accept that and realize that.
Now, if that's how you respond to a Yorker, you must have been quite the batsman, or you are still quite the batsman, because that's a brilliant answer. And I think it sets me up for, I think, the core question that you and I briefly discussed beforehand is, how are investors paying the price? How are investors paying the price for, the ANC's misguided economic policies?
Well, even before this, we've been paying the price in the sense that one understands where your and my retirement funds, pension funds, and even discretionary funds are invested. It's primarily invested on the Johannesburg Stock Exchange and or your residential property. That is the kind of middle class wealth definition. Now, our stock market for the last 10 years has been underperforming world markets quite substantially. And if it was a race, a comrades race, we would be at Cowie's Hill while the winners are already in Pietermaritzburg. And if one compares our returns in rands versus the returns of world markets, and especially the American market and then the NASDAQ, for every rand that you've made in South Africa over the last 10 years, you've made 3 rand in the global markets and you've made 5 in the American market. So we are really the laggards of the investment race. The second point is, in the last 3 to 5 years, most pension funds in South Africa have not made a cent of money. They've actually lost your money. I published some on BizNews last week, a table, and people were asking me, are you sure there's not a typing error in here? I said, no. You've made minus 5% for the last 3 years in your pension fund. You are going backwards so quickly. So that's where the average South African is now being hit from all sides, possibly losing income for a month or 3, perhaps permanently. Your pension fund is going backwards, and also your residential property not showing any growth. So we're all becoming very, very poor. But there are things that the average investor can do. It surprises me that they don't do it with a greater degree of intensity. Perhaps they're getting bad advice, and we can get to that a little bit later. A lot of the advice that you read in the press is very, very biased towards the institution giving you that advice. So you're going to get different advice from me.
And I think that's why your opinion is so really valued. Is the you don't hold back. You don't spare the punches. You give it as you see it. And we've touched on the fact that the country has no money. And a few weeks ago, when you and Davy and Lumkile joined us for that discussion around the budget, one of the points we touched on was this idea of prescribed assets, this pension and savings raid. Where do you think we are now in relation to that, itch that the government might want to scratch?
Well, they've been wanting to scratch that for a number of years since the 2017 ANC elective conference. That's been on their agenda since 2017, and increasingly people are saying that's the pot of gold that we should raid in these times, and they moralizing it and they're wrapping it up beautifully. But in the end, it's going to happen in one way or the other, and it'll be spun as we need it. The country needs your money. It won't be permanent. and it'll be beautifully spun. And most people will buy it and not really feel the effect, because the effect is hidden away in future lower rates of return. So it's you don't actually see it. It's not something that's taken out of your account and you can be enraged about that. It's 2% less growth per year over 30 years. It's a very theoretical loss, and most people will say, well, that's what it is, and it's fine. But it's probably going to happen very soon. I'm surprised it hasn't been announced yet. We were waiting for Finance Minister Tito Mboweni to announce something last night, which he hasn't yet. So I think that it's going to happen quite soon, and I think many commentators have been saying that is the pot of gold, and this is the time to use it. And so it's going to happen. They're going to go for your pension fund in one way or the other. Not that the previous government also did not do that. They did that for a very long period of time, and people paid the price. They just had less money at the end of the investment period, and we're going to go through that again.
Now, one thing that fascinates me about this is if government did actually manage some of these things, the state-owned enterprises, because a few weeks ago when we were talking about this, it was very much to bail out Eskom. That was the idea, but we've moved. I mean, the fact that your power supply, your nationalized power supply, is collapsing, and that's not your main crisis, says a lot about the state of the country. But it was then to promote this idea that pension funds can be used to prop up SOEs. And isn't the reality just then, if in the first place government managed these SOEs prudently, sensibly, effectively, then it wouldn't be necessary to force people to invest in those things, because if they are good investments, people don't need to be forced to invest there.
They've just been terribly managed. If you look at all the SOEs, I think with the exception of one or two, they all have qualified audits and they all are making losses. And it comes down to the ANC's cadre deployment, putting senior people into positions with massive salaries, which is another thing we can talk about. I mean, the private sector can just dream about those salaries. And it's like a turnstile of CEOs and chairwomen going in and out all the time because they didn't keep the party happy, and then they get booted 3 months later. And it's, you look at SAA, you look at Transnet, you look at all those big SOEs where large amounts of monies are being spent. It's just been a financial circus of note. And now we're sitting with a situation. Eskom hasn't gone away. It's just gone very quiet. It's been overtaken by the news, but we're already hearing that load shedding can be coming back very soon. So that problem hasn't gone away. Now we have the added problem of SAA. We have the newer problem of the land bank that last night defaulted on 50 billion rands worth of debt. And everybody suddenly says, well, the ANC and Cyril is doing a great job. I mean, it just boggles the mind. Those problems have not gone away. They've just been exacerbated to a very great extent by the COVID-19 virus situation.
Now, you mentioned these salaries, these cadre deployment salaries, perhaps.
Sorry.
No. I hope that cough isn't indicative of a pandemic taking hold in the Heystek household. But if we're looking at this cadre deployment salary situation, how has that really affected? Because we all kind of think, we're taxpayers, our tax money, we pay it and then we forget about it. Now, these massive salaries, often we get angry about them, but it's difficult sometimes to understand what the knock-on effects of those massive, unearned, unmerited salaries for these cadre deployment people, really how that's affecting us. So if we're looking at the salaries, as you mentioned just now, what's the great stink around those? What's the great problem for us taxpayers and for investors?
Well, you mentioned Mike Sushler published some figures a while ago where he showed how much the salaries of the government has risen relative to the private sector. Now, I grew up in an environment where my dad was a civil servant, and he always said, I work for a lower salary, but I have security of job and I have a guaranteed pension, as opposed to guys who go to the private sector, make a huge amount of money, but they can lose their jobs or their businesses overnight for whatever reason. Now you have a situation where government, and it's increasing, have guaranteed salaries and perks substantially higher than the private sector, plus they have guaranteed increases, plus they have guaranteed pensions. Now that is just unsustainable in the long run. We've seen it in Brazil. That has led to their downturn. We're going to have the same thing. And you have a private sector that has not been growing for 10 years. So your taxes are loaded onto the private sector, who is supposed to pay for this party. The private sector is rebelling in many ways. One is immigrating, two is investing money somewhere else, and third is tax evasion or tax avoidance, and it leads to all kinds of nasty outcomes. And now we have a situation where the private sector again is taking the body blow in terms of unemployment, bankruptcy, liquidations, and we have a government civil service sector that says we're going on strike because you don't want to pay us this massive salary increase. It is absurd, and it's unsustainable, and it is leading to a flight of capital out of South Africa, and it's partly to blame for the fact that 2 years ago, Hermann, the rand was 12 to 1. It is today 19 to 1. All those things do make a difference and play a role in the flight of money. The smart people, now you might like them or not like them, but they sit and they analyze these things. They pay Moody's a lot of money to analyze South Africa. And Moody's have just told them, we cannot recommend that you put money in South Africa. And a lot of South Africans have done exactly the same and said, I can't put money in South Africa because the odds are stacked against me. I've got so much tax. I've got BEE requirements. I've got affirmative action. I have so much against me. I can take my money somewhere else and get a better return at far less risk. And this is where the government is literally chasing people and capital out of the country. And then it looks around and says, well, hey, where's the money? Well, the money's gone. It's not here.
Now, there's so much to unpack there. Perhaps the first thing I want to ask is kind of a twofold question. I don't want to put you in an awkward position. The first question is, we often hear your big finance, corporate, invest, the big guys saying they've got confidence in this new government, they believe in the new dawn. But there's this old adage that money talks, and that the money in this case might do most of the talking. And do you think it's a fair criticism to make of many of corporate South Africa's most prominent members that they say that they have trust in government, but if you look at where their investments, where their monies are going, you get another story?
Herman, you're 100% correct. I mean, that's what government will and big business will do. They will put a positive spin on it, and they pretend that everything's okay, but everything is not okay. And behind the scenes, we know that there's lots of tension between government and big business. And I'd like to add to big business, the large investment companies have been very, very quiet about what's going on in South Africa because they're too scared to alienate their investors who might take their money and put it somewhere else. So the big asset management companies are particularly guilty of everything is okay, don't rock the boat, don't change your investment strategy, alles sal regkom, don't worry, we are bitter einders. Well, that doesn't work. That doesn't work for me. I'm too old to be put in a tough spot I've been attacked so many times. It's just like water off a duck's back. But be that as it may, the facts speak for themselves. So South African capital is flowing out of the country, not reported by the media, But in the last 5 years, 500 to 600 billion rand has left the country out of our stock market. 500 to 600 billion. One of the indicators I track when I speak about these things. And there was a short period of time in 2017, 2018, when we had the Ramaphosa period, there was a bit of money that flowed in. And since then, every single month since then, money has flowed out of our stock market in a very big way. Hence, our stock market is down in dollar terms about 60% from its peak. Now, that's astonishing wealth destruction. And you and I, who have not diversified our investments, will pay the price. We're already paying the price. When you go to an Apple store on Monday, if it's open, and you buy a new cell phone or your new Apple iPad or whatever, you nearly get a heart attack when you see the price in rands. But that's the price that we pay for this money flowing out, the rand going from 12 to 19 in 2 years. That is a phenomenal loss in global purchasing power.
Now, talking about the global idea, the government has over the last few months taken steps to make it difficult for you to, there's that expat tax issue. There's this idea, the already existing idea that you can only move a certain percentage of your money overseas and invest them overseas. You have to keep a certain percentage here. Now, that's essentially the prescribed assets thing. And should people expect that to be, turned up to 11 to stop this? Because they are scaring money away. Capital is flowing away. So they have to do something, but heaven help them, they're not going to do the right thing. So is the only thing to do actually, trying to stop the money leaving the borders?
If Tito Mboweni wants to really impress the world, he should scrap exchange controls immediately. But they won't. They will turn the screws because we have it in various ways. One of the most subtle ways of exchange control is through the Regulation 28 of the pension funds, in terms of which only 30% of capital can be invested offshore. Now that has cost us, all of us, a great deal of money because the rest of the world has been booming. NASDAQ has been going through the roof, but we can only put 30% of our assets in there, benefit from that. The direct foreign exchange rules have been fairly relaxed in the sense that you can take per year 11 million rand per year out, and a lot of people have been doing that. So they left their money in the pension funds, but they've externalized their discretionary capital. But there's still this attitude in the media and certain groupings that's disloyal and unpatriotic, and you should invest your money in South Africa, etc., etc., despite the fact that you're not making money in South Africa, which is quite absurd. I often use the analogy when South African rugby players started playing rugby for money in Europe, in France, in England. They were criticized. They were cast out into the wilderness. They were branded as traitors. Now, the same thing is happening with the financial world, where you dare recommend something that the big asset managers in South Africa don't like, and you immediately are branded as some kind of a traitor. I don't understand it. Even fellow financial advisors had a go at me, calling me a financial pornographer. I don't know what the hell that means, but it sounds good. But that's just the nature of the beast.
Yeah, I see we're getting back to that Warren Buffett quote of being exposed. Now,
I've got you want to see? I've got my costume on.
And that's why we have you on here. Now, you mentioned very early in our conversation now about you are frustrated. There's this thing that the investors aren't giving the advice they should be giving. And you said there are things that people can do to make this awful situation perhaps a bit less awful for their savings and their pensions. If you were to give us, the 2-minute noodle version of financial, perhaps not advice, but insight. Where do we start with what investors should be doing?
Well, first of all, you have to analyze, and it's a bit of jargon, but it means you have to analyze your asset allocation of your portfolio. In other words, you've got to sit down, either yourself or you and your financial advisor, and say, what is my overall asset allocation? What I mean by that is, and it's very easy to find out, where is my money invested? Is it in SA? Is it overseas? Is it in cash? Is it in property? Or is it in a mental mousse of a lot of stuff, which it probably is? That's point number one. If your exposure to the offshore markets is low, you need to increase it. And you can do it very cheaply and cost effectively by making changes within your existing portfolios. You don't have to go and cash out everything and start all over again. You can make internal switches, and that's where you'll get the resistance by the big institutions and the asset managers. You can, for instance, if you have an RA or a preservation fund and you're over 55, you can either pull that money out or you can move it in the fund to either cash or a cash type of investment. But the asset managers make far less money on a cash investment than on an equity investment. In fact, they make a third of the fees that they would. So they would not recommend that to you. They will say to you, stick with your plan, don't rock the boat, but that's not been the case. So you can, by changing your internal structure of your pension fund, retirement annuity fund, provident fund, you can get far greater offshore exposure, and you can also have more cash in your portfolio, and that shouldn't cost you a cent. Just makes a change of your portfolio.
Now that's it struck me the other day. I received the first advert on Facebook of someone, some company trying to convince me to move my assets to Mauritius. Now, not that I have assets to move to Mauritius, but a few days later, I got an advert trying to get me to move my assets to New Zealand. And again, I'm faced with the same issue of not having assets to move. But is the rest of the world and companies overseas and perhaps even locally seeing this as an opportunity to provide people with good investment options? Or essentially, are they giving this kind of advice? Are they pushing this kind of marketing because people are scared, and they can make a quick and cheap and dishonest buck? Or is there something really to be considered in trying to get your money overseas to safe places? I mean, many people just don't want to think South Africa is in the state that it's actually in.
Correct, and you're quite right. I mean, my inbox is flooded with all kinds of investment schemes, and I can tell you about 90% of them are fraudulent schemes and schemes that I wouldn't touch with a barge pole. And I get a lot of my clients emailing me saying, "Did you see this? What about this?" And then you ask 2 or 3 questions, and you know it's a scam, and the chances are very high that you will lose your money. So stick to the regulated big companies. But now you can deal on a platform in Guernsey or in Isle of Man. You can deal with global investment giants that are highly regulated by the FSCA in South Africa. That's your first question. Is it on a platform, and is it regulated by the FSCA, and are their funds licensed for sale in South Africa? Those are the 3 questions. And if the answer is yes to all 3, then you can talk to those guys. But if they say no and they give you all kinds of reasons why they're not, then you put the phone down. As simple as that. So the flow of money has been to these regulated entities, and the returns, I can tell you, have been quite phenomenal. Not only because the returns have been better, but also remember, South Africa traditionally has been a mining manufacturing country. We're not exactly in the forefront of technological innovation, biotechnological innovation, aeronautics and artificial intelligence and cloud-based computing. In those sectors, there have been fortunes made even now, those sectors are at high record levels after the crash. So South Africa is becoming disconnected from the big main investment themes in the world. And that is what South Africans need to understand, that there's a lot happening out there that we don't have in South Africa. So deal with the regulated entities, deal with FSCA approved funds, and you can make yourself a lot of money over time with better returns and at a much lower risk profile.
You mentioned mining and manufacturing, and that's perhaps a good pivot point to look at the lockdown, because we've seen Minister Nkosazana Dlamini Zuma announcing that certain mines can operate at some operational capacities, and mining and manufacturing traditionally being very much at the heart of the South African economy. Looking at the lockdown, what would the lockdown have done to mining and manufacturing? And perhaps looking forward, the lifting of the lockdown, perhaps we could consider a few options. Firstly, what has been the effect? And secondly, government has announced this phased out of the lockdown. How has the lockdown affected these local businesses, mining, manufacturing, as you mentioned? And what do you expect a phasing out of this lockdown to do for businesses, perhaps in mining, manufacturing, but perhaps even your beauty salon, your bed and breakfast somewhere?
You see, the big mining companies and the big manufacturing companies have taken a hit like everybody else. You're talking about BMW, Toyota. They've already said we have taken a big financial body blow. They can afford it. They've got the resources. They've got big parent companies who will put in money, and they've also got access to capital via government or semi-government bodies. And they will, yes, there has been lost production, but they probably will ramp it up and quickly get back to where they were. The big losses are going to be felt in the small to medium enterprises, and a lot of them will probably not open their doors again. I saw some stats this week that up to a third of small to medium companies will, if the lockdown is extended for a month or two, will simply just not open up again. They don't have the capital, they don't have the finance, they've just simply said, I'm going out of business. So I think that's where the pain is going to be felt. And I think that's where the government, although it has very good intentions, is really doing major damage to the economy. I saw, and I'm quite sure that you saw some spokespeople from the restaurant and hotel industry saying 800,000 jobs are going to be lost. That is, and it'll probably not only be lost, it'll take about a year, 18 months for those industries to come back on stream. So that's where the damage is going to be. We're already seeing small to medium companies writing to their landlords, I can't pay your rent, or I need to pay half rent. So, and even big firms are saying, we're not going to pay rent. So it's a spillover into the property ownership. You already see it in the value destruction of the listed property REITs and the listed property stocks. Their assumptions, their projections, their 5-year reviews have all been cancelled. They say, we actually don't know. So as far as the South African economy is concerned, there is, and I'm not being negative, I'm in the same boat. I mean, our doors are closed, our business is down, but a lot of companies will probably not recover. They will not open up again, particularly coffee shops, restaurants, even hairdressers. So Hermann, from now on, you'll have to be doing your own hair from now on.
I have already started. That's why I look the way I look.
I thought as much, yes.
I'm going to switch off my camera now for the safety of my own. I'm kidding. We have a question from one of our listeners, and I think it's a very practical question. I think it's a very good question. How do we even begin to find an investment advisor that is also a trader? That understands these currents, these flows, these factors. Where does the young Alleman even start with trying to get the first, most basic, fundamentally sound person to help them?
Probably living in Mauritius.
All right.
There are a lot of good financial advisors out there. You need to ask the advisor, are you a trader or are you a buy and hold type of investment advisor? So a lot of the big banks, big institutions have their trading desks, and you will become a client, and depending on your mandate to that advisor, that will determine what he or she will do for you, either trading aggressively or buying per mandate or whatever the case might be. You just talk to three of them, you'll find them, but it depends on your mandate. And secondly, and this is the problem, it's very expensive to run an investment account for a person in terms of compliance, office costs, and it normally comes with a certain minimum, which is for many people too much. And they say, look, if you don't have R1 million, we really can't help you. You either do it yourself or whatever the case might be. I might be wrong in terms of that minimum. It could be higher, it can be lower, but that normally is the case. And unfortunately, then you start trading yourself, opening up a trading account and see how it goes. You have these trading accounts where you can practice and see how you do until you start using your own money. I do it on ShareNet, for instance, but people use WebTrader and PSG. So there's a lot of places where you can do that. But everybody wants to make a lot of money and trading and buying and selling. Let me tell you, there are bold traders and there are old traders, but there are not bold and old traders.
No, I think when now people are sitting at home during the lockdown, it might be a good use of time to start, using those experimental investor software to perhaps learn something about how these things work.
I think, Hermann, on that point, it's a very good time to actually go and sit down and look at your overall investment portfolio. That is what you can sit down and say, get all your statements, whether it's a pension fund, an RA, or a unit trust, look at them and then spend some time. That's normally the problem that most people don't have. They don't have the luxury of time to analyze their funds, track the funds, and then come to some kind of a conclusion. And secondly, and very more importantly, we've been telling our clients, you're sitting at home, now's the time to let's go through your will and just to make sure. And that, amazingly, is the place where most people have said, yes, you're right. I haven't added the grandchild, or I haven't added the fact that I sold my property and the executor is no longer in South Africa. So that's been a very good period of time the last month to go and just make sure your will is up to date, signed, legal, and reflects the current situation. We picked up a will from someone the other day. His will was still made out to an ex-girlfriend that ran away with a gym instructor 25 years ago.
Amazing how fast that will changed, I think.
In a blink. So, jokes aside, it's quite a serious matter, but now is the time. So stop baking bread for a day or two, Hermann, because that's what everybody has been doing. And sit down and just look at your finances in a cool and calculated manner.
In my defense, it was a very good banana bread, and the bananas were going to go to waste otherwise. I have a
yes, send me the recipe.
Kook en geniet. Tannie sal
yeah, there we go.
Now, a last question from me, and then I have 3 or 4 very interesting questions from our audience. There's this mantra, this old slogan that, when stocks are low, when it's a time of crisis, perhaps when the tide is out, to use Mr. Buffett's analogy again, that's the time to, buy shares. Someone the other day said to me, now's the time to buy Sasol shares and those kind of things. Is that old nonsense, or is it something that you should take seriously and discuss with people who know? Or, is it just this old truism that isn't actually true?
No, it is certainly true. I mean, if you wanted to buy shares or get into the market now, is definitely cheaper than than 3 months ago. Markets are down 20 to 30 to 40%. I mean, some of our banks, top to bottom, are down 55 to 60%. They might go down another 10%, but you need to do a bit more research and be on top of the tracking of the funds, and you need to wait for some signals from the market in the form of moving averages to show to you that, oh, now the markets are moving up, there's buying, and the prices are moving up. Let's start nibbling. But just to throw the dice and say everything on black because I just got a feeling, it can hurt you very badly. Because Sasol was 100 Rand 2 months ago. People were finding, should we buy Sasol? And it went to 80, it went to 60, it went to 40, it went to 20. So those guys who bought at 20 have now made a lot of money because it's gone back to 60. But the guys who bought at 80 are still down 25%. So yes, there are going to be good luck stories, success stories a year or 3 from now. Personally, I would still wait, and there are certain sectors that there's so much uncertainty, like the property sector and the banking sector, that I would stay away from. If you want a free bit of advice, I think the gold shares are looking very attractive. New gold is a very good investment. Price of gold, that's cheap, easy, you buy it and you hold it. That's where I probably would commit some money. Alternatively, I'll be buying some overseas technology stocks still, which have been superb investments for a very, very long time.
Now, a question that I think we've all been worrying about and thinking about, and Mike certainly talked about it the other day. Do you think the world will see a Great Depression again?
Well, that depends on the definition of a depression. In certain instances, South Africa already is in a depression. If you look at the overall unemployment rate of 40 to 50%, we are in a kind of a depression already, no question about it. No growth, high unemployment. Will the world go into a depression? Probably not, but it is heading towards a recession and a period of very low growth for a couple of years. Because as Johan Rupert said the other day, don't think the world economy is just going to go back where it was. There's a total reset coming, and you need to be sharp enough to identify where the reset will take place and where you can benefit from the reset.
This is a very blunt question. From a legal point, I think I would be very careful. But someone is asking here very bluntly, shall I sell my SA shares and put the money into US dollars in cash?
I couldn't give that advice because but let's assume hypothetically, you come to me and you said, should I do that now? The answer will probably be yes, depending on certain factors. I still think that for the next 3 to 5 years, the overseas markets and certain areas of the overseas markets will still outperform South Africa for a variety of reasons. But don't take that as gospel. That's not advice. That's just what I would do. I don't have any stocks on the JSE, and I haven't had for 7 years because I can get better stocks somewhere else. Why must I buy an inferior pair of jeans made in South Africa if I can buy good quality jeans that is made China, for instance? Not a good example, but anyway.
Be very careful. Actually, I was thinking about this in your previous answer. Do you think the Chinese investment scenario will change now? Will people cool down on seeing China as an investment option purely because of the global hype, the perhaps global relationship reset that we're looking at?
Look, money has no morals, mostly. It'll go where you can make money. But there's, I think, already large American companies are pulling out their factories out of China, moving it back to America, because they've seen the danger of being dependent on a single source supply chain. So, for instance, most of the medicines made in the US is made in China, and that's becoming a very big political problem in America. So already those guys are moving factories to Mexico, Canada, and even into the United States. So I think there's going to be a geopolitical reset as well, and I think a lot of it is going to be quite negative towards China. We've seen Australian government, the Canadian government, German newspapers, Der Spiegel, openly critical of China, how it's handled it, and they're basically saying China owes the world an explanation and possibly a lot of money as well.
Now, if we're looking at people after China, who would be the next China? Because China was this manufacturing hub where labor was relatively cheap, where infrastructure was good, where it had good relations with the rest of the market. Is there an obvious successor to China, like an India perhaps, or even a Japan, but I'm not sure about the price of labor there?
Not to the same extent. I mean, everybody's been saying, well, India is the next China and will overtake, but that hasn't happened. A lot of people are outsourcing manufacturing to Bangladesh. Clothing is going to Bangladesh. Vietnam has stepped in with certain types of businesses. But I think that the China experience the last 44 years has been a once-off, fairly historical and dramatic historical event. And I don't think any other country will manage to duplicate that to the same extent. And the magnitude of the growth of China probably won't be repeated by India, Singapore, or not Singapore, but Vietnam, Afghanistan. Won't probably happen in the same extent.
Here's a very interesting question, and I think it's probably the third or second last question that I think we can squeeze in here. Bitcoin trading, cryptocurrency trading. Now, I'm not going to ask you your advice on that. That's very risky terrain, I think, these days. But an overall insight, a look at perhaps a good question with regard to cryptocurrency and Bitcoin trading is, where do you start considering? What's a responsible way to start looking at these options as viable investment or, places to store your money?
I mean, for the last 5 to 6 years, I've been trying to get my head around Bitcoin or these type of currencies, and I still haven't found. A lot of people have approached me and says, yes, Bitcoin, you must invest in Bitcoin. I say, okay, you explain Bitcoin to me in 3 minutes in easy to understand language. And I haven't had someone who's been able to do that. And I have not been converted to Bitcoin. I maybe it's my generational fear of computers and hackers and that your money can just disappear one day. That fear is real. And I might speculate in Bitcoin. I might put some money and see how it works. But am I going to put 50 or 60% of my total assets into an investment that I don't fully understand? No, I would not do that. I would not do that. Play around? Of course, yes. Like playing around with futures or options or Bitcoin, you might make some money, you might lose some money, but it's still not a mainstream investment as far as I'm concerned.
Here's a very good question. MTI has shown positive trading since they started out, grew to 25,000 members who invest and joined in the past year. What would your opinion on something like that or this specific instance be?
MTI, what does that stand for?
I am not sure.
What concerns me is that it sounds like a lot of members have joined and it's grown, but I don't know what product it sells. It's like the level marketing schemes that we see from time to time. Carrot bars or Carrot Gold a couple of months ago worked on the same type of principle. You join and then you've got to get 5 other people to join. They then bring 5 people to the party and everybody benefits right up to the top of the pyramid. All those schemes, and I've been in journalism for 40 years, all of them have collapsed at some stage. I've not seen one that has survived and made money over time to the people at the bottom.
Fascinating. Because I see a colleague of mine just let me know that MTI is Mirror Trading International, but that unfortunately doesn't mean much to me. It might be my ignorance, but it's
I've
something
never
new.
heard of it, and I'm kind of clued up. I've never heard of it. And when they start talking about memberships, the alarm bells start going off. Because 20 years ago, 30 years ago, I was writing, when I was at the Star newspaper, I was writing about these multi-level networking schemes. I went to these meetings, and it was rah, 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 you're going to make so much money. It all eventually collapsed 6 months later, and the perpetrators were on a plane back to wherever they came from.
Right. Then we have a last question that I'm going to ask you, but I'm going to also be voorop die wa and also give a version of an answer. How do we influence legislation to re-look at the fees charged by investment companies and advisors?
Well, there's tremendous fee pressure already. I mean, it's a free market as far as fees are concerned. And let me tell you that fees today compared to 20 years ago have reduced substantially. So fees they're transparent today, and they are there, and whether you like it or not, it's like any product. You can buy a chicken at Woolworths, they have a price for their chicken as opposed to a chicken that you make yourself. So I have no problem. Ask the question, and you must ask yourself, are the fees justifiable for what I'm getting back in return? South Africa, there are companies like Segnia who have come into the market with very, very low fees. So you as the investor you've got total choice. You just have to shop around. And if fees are the driving consideration for your investment decision, you can get extremely low fees at certain companies who are breaking the mold. But I don't want government to get involved in fees. It should be a free market decision based on honesty and transparency. But fees have come down, and have come down dramatically in South Africa.
I would never have thought I would see the day that I think Magnus Heystek is in favor of fees must fall. But that is perhaps...
Absolutely. We're going back many, many years where I was writing about these horrendous commission structures on endowment policies and retirement annuities, and we've always been in favor of lower fees. But I've been saying the free market, I don't want government to step in and start regulating fees, because then it's going to be a bugger up, because then the fees are going to go up.
Yes, no, I absolutely agree with that. Magnus, we have been going for 55 minutes. I asked only for 40, so I apologize, but I appreciate the time that you've given us this morning. In a last, perhaps, parting shot, I always ask people with a presentation or a discussion, what's the one thing that people should take away from your presentation or your discussion? Now, I might be putting you on the spot a bit here, but what's the one thing you think our audience, our friends of the IRR, should take away from our discussion here today?
I think you should take better control of your investments. Don't hand over the investment decisions to somebody else, an advisor or a big institution who makes it on your behalf. And by increasing your education on personal finances, you'll be surprised how you can change the outcome. Because the knowledge is there, it's on the internet, and just learn to think and consider yourself to be a global investor instead of an investor in one little part of Africa. And the world opens up for you. That's how you should approach your investments. Put yourself in charge with increased knowledge.
Excellent. Magnus, thank you so much for your time this morning. It was I enjoyed this discussion immensely, and also thank you very much to our audience, everyone you've been asking very good questions. I apologize if I couldn't get round to all of them, and I specifically want to thank the friends of the IRR who really made this morning possible. We know the country is going through a tough time on many levels. And it's very, very encouraging to us that our community of friends of the IRR is still strong, still growing, and really looking into the fundamental solutions of how South Africa can be made better. If you like what we do here, go on our website, become a friend there, SMS your name to 32823, and hopefully that will give us the ability to get Magnus and people of his caliber back on here to chat again. Magnus, everyone, thank you so much.
Thank you very much, Herman, and good luck, everybody. Stay safe.